All right, we're back up. I'm here too, buddy. Yo, one more guy and we can get a poker game going. I think we're just gonna chop around a little bit. Not a bad move though. We're getting some volatility in SPX. I mean, 2 days in a row we ended up making some pretty good money. Not gonna hear me complain about that. I must be in the calm before the storm right now, because it is just dead calm and real, real hot. Yeah, man, we had a really good day on SPX. We caught a nice move down, and then we caught the move back up. Killer day. Caught this move right here. Oh wait, no, that was yeah. We caught that move. I think actually we took it on the break right here. Rode it up. Made some money, honey. And then in the morning we took a break right here. We took this break of the low right here, traded it down. Yeah, it was really active and nice. I mean, you could see the move, nice moves. So there was money in the trades. Oh, you know what? No, we took it right here after the last kiss, because I remember the 30-50. Excuse me. A hiccup. Oh, any good entries on SPY now? No, we're just in that consolidation there. I mean, there's nothing I'm looking at. And we got the Fed's, the minutes in about an hour, so it seems like all the life has been sucked from the market. But yet, you know what? Breaking this low, 52.87. So you could probably go short right here, because this is a break of the 30-minute low. Should get a little congestion around 63, and then you might have a target of about 47.52. So we're breaking that last bit of support. Got a little something over here, but and there you go. There's an entry. Yeah, it's actually, for a short week, it's turning out to be a really phenomenal week. I had a really nice day yesterday and an exceptional day today. So not a bad way to start off the summer. Well, this is a manner for companies to raise money to do business. That's the point of the stock market. That's why they publish, bring public securities, so that they could raise money to build a business. It wasn't created for the benefit of the shareholder. The shareholders just benefit when the companies do well. At least that was the initial idea. It was created so that companies had an avenue to gain financing to expand their businesses. Then the general public got a hold of it and made it a casino. But this is not this is not the culture from the beginning. I mean, even when I came into the industry, it was more about investing in companies and value. Then the tech, the .com era came, and that spurred a lot of retail investors and a lot of really smart individuals who poured all their money in the market and wiped themselves out and started this kind of frenzy. Then with technology came electronic trading, and it became very aggressive. Lots of moves in the market. But back in the day, this was like watching paint dry. I think the composite was at 1500 when I came into the industry. I think the Dow was like 25 or so. Well, no, that's not true, because there's a book value on stocks. So, I mean, you just have never learned how to do the fundamentals on securities. But, and there's value, you know. So earnings per share, when you look at companies that are trading earnings per share, and they're trading like 34 times earnings, that means that that's just what it is. If it's earning $1, then you're paying $35 more for a share, which that is ridiculous. You know, I mean, that's a ridiculous concept. That's like going to the gas station down the block that makes $100,000 a year, and you giving them $3,500,000 for the gas station. You know, I mean, if you were to buy a hard property, a gas station, I mean, you'd value it at maybe 1.3, 1.4. So you'd give them 130, 140,000 for that $100,000 gas station. That's the general idea of investing. You're looking for value. Now, because you have supply and demand in the market, it increases the value, and you're not paying that traditional brick and mortar valuation of a business. So you know, you account for supply and demand. But, you know, I mean, I think even companies trading 34 times earnings is kind of expensive as far as investment goes. Yeah, they're trading X amount more because more. Yeah, there's supply and demand in it. But if you are investing, you'll look at a company. You'll look at its PE in relation to other companies in its sector, and you'll figure out what the value is, what it's really worth to you. And you could look at the book value too. You know, the book value is if they liquidated the whole company. You know, what would you get out of it? But I mean, that's what investors do. That's what Buffett does. You know, they break companies down. They're buying companies. They're not buying rumors. They're not buying hype. You know, they're not buying pipe dreams. They're buying good companies at a proper dollar value. And because they trade publicly, you take into account supply and demand. But yeah, you know, I mean, if the valuation is ridiculous and you want to buy the company, you know, if it's trading too many times its earnings, you just wait, because things have a habit of working out, you know, and correcting themselves. a lot of guys, a lot of guys nowadays have never been in a bear market, right? So figure this market turned bullish in 2009, right? So you're talking guys like 11 years, like careers, where they've never been in a bear market. They have no idea what a down market is. That's why I laugh at a lot of these guys who, they just buy and the market's going up and they're buying on dips, and which that's cool right now. That is the climate right now, and I agree with it. But it's not always going to be the case. And those are the future salesmen, shoe salesmen of the world. And I see, like sometimes guys pop their heads in over here, and make silly comments and stuff like that. And I mean, I know the guy, man. I know the personality. I've seen it 100 times. They come and go because they have no idea about business. They just know what the market has done while they've been alive. But, I mean, you were 20? You think? Wow. That's like an indictment on the public education. You don't know how old you are in 2009? You were 20. So, through school, I guess you remember the financial crisis, right? And I've been through a couple of them. I remember when I was in school in the 80s that it had happened. And, that's when I first learned about re-education for employment and things like that, what people are going through, and, people whose jobs were eliminated and things. So, and then in the 90s, that's how I came into the industry. I was a contractor. I was actually a black man. During the time David Dinkins was president, he was giving out a ton of work to minorities. So I got a hold of a dude who ran a coalition, and I set up a company with him up front, and we started doing construction work under minority status. And I mean, I had all the hooks, and all the contractors needed to give out a certain proportion of the work to minorities, and they knew me. So they gave me the work out. And then the recession hit, and that was it, man. Construction just tanked. There was no work, nothing going on. Saw an ad, earn while you learn. And it all just clicked for me. So, tons of recessions, lots of people coming out. Yes, I remember the crisis. My family business took a beating. Yeah. Very good, man. Take your AMC profits. And then invest wisely, because honestly, I don't think AMC is a wise investment. It's a crapshoot. I mean, I hope you get lucky, but you can't hold it any higher than a crapshoot. I mean, the concept is sound, but the idea of being able to organize all that buying power is silly. And the first time it worked, but you have to realize that you're not surprising these guys anymore. And these guys are professionals, professional risk management, professional money people, professional market people. Everybody thinks that they're dealing with a bunch of clowns that are running hedge funds, and it's just not the case. These are the best of the best, most hedge funds. I mean, you got to come out of some really hot school and show some performance to work in a hedge fund nowadays. Although there are some guys that were just street guys, but built a name for themselves and demonstrated their talents. But again, you're talking about the best of the best. And they're shorting on fundamentals and and value. The apes are investing on hope and prayer. investing's a cleaner picture. You know, there's not a lot of noise when you're investing. When you're trading, there's a lot of noise, and that's where people get hurt. You know, when they don't understand what's noise and what's good market movement. Although I guess it's all noise, really, and you just got to know what noise to trade on. I was a lot more aggressive back in the day, but you know, I mean, I've been doing this 20 years, so you young guys are building a life, and I'm just kind of wrapping one up, you know. You know, I mean, my kids are taken care of, my family's taken care of. I mean, I've achieved that generational wealth, and there's not much more I need to do. So I don't really need to be that aggressive. It's actually easier to make money when you don't really have to worry about making it. You know, you just kind of chill. And you know, I've done a lot, so my needs are very, very limited. Yeah, um, yeah, he knows it. But you know, he's making money off of the hype and the pump, and maybe he's managing his trade well. Yeah, you know, and hopefully he's not lying to everybody. You know, he's not liquidating while he's pushing the stock out, and yeah, you know, he's not getting everybody to buy it and pump it up when he's saying he's buying more. So if he's not doing all that, then yeah, you know, he'll probably come out of this better than he went into it. If he's doing that, then he's really compromising his future. But yeah, you know, he's a young guy. I saw some other dude they interviewed. I don't know, maybe it was that Trey dude. Um, I mean, the dude's like 23 years old, man. You know. Now, I'm not saying there aren't sharp guys out there who are 23, but there's no substitution for experience. I don't care how intelligent you are and how sharp you are. You don't know the subtleties and the essence of things. You need the experience, and there's no substitution for experience. You know, you can be a brilliant, brilliant guy, but you got to get in there. You got to sharpen your teeth. You got to get a few scars on your face to figure out what needs to be done and when, and then you prosper. And I've seen that. I've seen brilliant, brilliant guys come out of school and be smart enough to know that they need to sit down at a desk, usually with guys who are half as bright as them, and they get some experience under their belt, and then they capitalize on what they learn, or you know, extrapolate what they learn on the desk from guys who probably aren't even as smart as they are, and then they become titans in the industry. And then I see guys who come out of school that are really smart, that are know-it-alls, you know, and you know what? They come out with the pride and everything, and homeless shelters are full of guys like that. Guys like that. He won't tell anyone when he sells in fear of a lawsuit. Is that speculation, or did he say that? Um, well, I don't agree with that, Wyatt. Yeah, you know, I mean, lots of people do that, but your capital is precious. You want to get all the mistakes out. You want to be good at what you do. You want to have the confidence, and be comfortable. I mean, if you are confident and comfortable and you know the setups and you know the moves, then yeah, by all means, you know, if you feel you're ready, be ready, but make sure you're ready. Wyatt, yep, they're all like 1 year or less in the market. Huh. I mean, if he's telling everybody when to buy, that's more liability than telling people when to sell. I mean, you know what? I don't even look into it. And you shouldn't, you know, get too tied up in it either, man. Just business is void of emotion. So just be pragmatic about everything. Just look at the guy, what he's doing, take in whatever information you can, use that to your best interest. Don't get emotional or caught up in it. Don't, you know, begrudging, resentful. If you don't trust the guy, that's a business decision. I don't trust the guy, and I'm not going to trade that way or do business with a guy. You know, Warren Buffett said, "You can always tell a guy tomorrow you hate him." No need to, you know, bring emotion into the business. The other interesting thing he said was, it's when the tide goes out that you see who's swimming without any swim trunks. And that's basically what he's saying is, you know, when the shit hits the fan or the market hits the fan, that's when you are going to see who was just bluffing it and who's far as gumping their way through and who had the skills. And I've seen that, I mean, time and time again. I mean, that's how Madoff tumbled, and you know, a lot of brokerage firms went under, even Stearns, you know, because the party was over. The punch bowl was taken away, the market tanked, everybody got hung out to dry. Yeah, that's cool that you're expressing. I'm just, you know, trying to give you a little advice, you know, that you've got to be able to keep your emotions. I mean, just like keeping it out of trading, you got to keep it out of business, you know. I mean, there were plenty of times I wanted to tell people to go scratch their ass, but I held my tongue and did what was good for the company. And, you know, that's just the nature of the beast. And talk comes cheaply. It's easy for everybody to talk. What time do we have here? Half hour to the minutes get released. I mean, you could obviously see that people are sitting by and waiting. I mean, everything, the volume just kind of dried up and everything. But I don't know what the hang up is. I mean, we all know what it's about and what's happening. It's not going to be any surprises. It's an interesting daily bar. This was a better day. I'm surprised I didn't make more money. I was too conservative yesterday. You know what it probably is? It's traded like a Monday, and it was a Tuesday. It all just didn't feel right. But look, we close right here today. If we close right here today, it's like, nothing really happened. I mean, for traders, we made some money in there. But anybody who's investing, nothing really happened. Nothing really happened yet, these past 3 days. We're generally in the same spot. We closed here on the 2nd, and we're pretty much there on the 7th. But you know what? If we just traded in this range for the whole summer, as traders, we're going to squeeze out a lot of money, and income trades will perform very well. So I could look forward to a season like that. Onward marching soldiers. I wonder if my buddy with the Apple short jumped out the window yet. I'm trying to talk him through it. Broke that 82. Oh, nobody's liking me? No, I got more than 2 likes, man. Actually, I didn't even do the commercial announcement at all today, right? So if you're new to the channel, subscribe and hit the bell, because I get knocked off often because I'm on the back of a boat. So this is third world trading. And hit the like because it helps. Thank you there, Mr. Martinez. Martinez. That's a Jewish name, right? Ba-dum-bum. Mm-hmm. All right, look at that. We caught up. Everybody up the likes. I appreciate that. Third world trader, yeah. Yeah, they'll think I'm in Ecuador trading currency, crypto, making it my national currency. So I received this random chat on WhatsApp, and they had asked me something. Puerto Rican, huh? Man, I get a lot of Puerto Ricans. I didn't think there were that many left in the country. Um, but anyway, this so I get this random chat, and there's a picture, and it's this little Asian honey, who's like really cute as a button. Um, so I told her I think you got the wrong guy, and yeah, she gave me this whole thing. Her assistant must have given her the wrong contact. So I was like, all right, well, have a nice life. And then she started texting me to chat. So it's obvious this is a setup. She just hasn't gotten to the game yet. She's still like massaging me. So I'm eager to find out what her game is. Like sponsorship for the states, get enough information to do an identity theft. I think we talked about this. Somebody said it's probably a guy. I'm thinking it's probably a truck driver. Big old fat dude. She's been very proper though. Yeah, nothing weird. Oh, you're still here? Yeah, that's cool. The cool ones are still in Puerto Rico, right? You go to Puerto Rico, and you get all them hotties. That long, silky black hair. Yeah, could be looking for a sponsorship. She hasn't hit me up for anything, but she said she's in Shanghai. She's in mainland. I mean, could they even get out? I mean, I know like the Philippines and stuff, they could work it out and get out, but you know, getting out of the mainland, getting citizenship here in the States has got to be difficult, unless she's looking for like a what is it? One of the visas, a B1 visa or something. I remember I used to sponsor a lot of people out of China when I had the firm. We got some really, really good people too. A sugar daddy. Yeah, you know what, man? I might be down for that. It seems like an equitable arrangement, Like, yeah, no strings attached. I'll take care of you, and you take care of me, if you know what I mean. I mean, in my experience, it doesn't really veer far from what a relationship is like, especially after you put a few years in. Well, I don't know about an uptrend in TSLA. I mean, I call that more consolidation. I mean, here you have a pivot high that's lower than this pivot high. Here you have a pivot low, lower than that pivot low. I mean, it took a little move off of there, but I do not know. I do not agree with that. That's on the 32nd. S&P, no, S&P's in a consolidation, if you ask me. This is the trend line, and then yeah, you know, it broke the trend and it just kind of traded over towards it. We could just get rid of that line too. It's not doing anything that would encourage me to get involved. I'd much rather talk about sugar daddy stuff. Yep. Oh, really? She got her U.S. passport, or did she get her Chinese passport? Doesn't speak English, huh? Yeah, I got to get me one of those. Guatemala. Yeah, that's cool. I'm a big fan of brunettes too, man. So, yeah, you know, I like Asian women. I like South American women. Persians. Persians. I love me some Persians. U.S. passport. Oh yeah, that's cool. I had a friend who was from Hong Kong, and they were forcing her to get her Chinese passport, and I think China was doing that. But I think she reestablished her British passport. But I don't know if she can do that anymore. She's here in the States, though. Get on 90 Day Fiance and see how it works out. Huh? Yeah, nah, that's all right. I'll go for the hard cash deal. Well, there you go. There's a break to the upside in SPX. Oh, you know what? Nope, we got 10 minutes, 13 minutes. But this baby's just going parabolic. Is there news? That looks like it could be a new. Well, what did it really run? Yeah, it ran 3 points. I doubt it's a news event. It just looks bigger than it is by yeah. China is cracking down on stocks that trade on U.S. exchanges. Yeah, is what's Tesla doing? It's down 15. This, if anybody holds Tesla, this is a good time to get out and just see what happens. It seems to want to break soon. Um, well, let's look at QQQ for you. I mean, the S&P is ripping without the composite, and the Russell is trading down. The Dow's up. What time frame are you looking at? Mr. Ditter. No, I'm looking at a daily right now. You use the daily and 1 minute or less? You're confusing me, son. A lot of different things will be happening on a daily to a 1 minute. So I'm looking at a consolidation, really. On the 1 minute. The momentum is bullish. Really, probably would have wanted to have taken this hammer and then see if you break here. I don't trade with the VWAP, so I couldn't help you with that. But there you go, it's breaking the high now. Everything is ripping. It has the support of all the markets, so you know, if you want to take that long, I'd say it's not bad. It looks like the composite is about to break the high of the day. The only thing that's not participating is the Russell. Oh, it's not the high, but it's breaking the pivot high, making a new high. Just be careful because the minutes are being released. You know, you're trading ahead of the minute release. And I'm not expecting anything strange in there, but you never know. All right, cool. Go, baby, go, baby, go. Dinner on dinner today. This morning, if you're around, Andrew, there were a lot of moves. I mean, big moves. We caught a lot of points. You know how conservative I could be, and I took 3 trades today. For sure, steaks. Yep, I got the Peter Luger sauce. Got a bull flag on the 1 minute in your QQQ. Oh yeah, good, super job. Yeah, QQQ. I saw the composite made a nice move. Yes, this morning. Trading the Qs. Yeah, I don't know what a Gucci face mask costs, man, but speaks volumes. We're just dancing around yesterday's open. On the S&P. Got 2 minutes to the Fed release. Actually, you know what? I got a better source. Come on, fire up. Damn, into it so slow. Wow.
Welcome everybody to Power Lunch. Hope you're having a nice day. Along with Morgan Brennan, I'm Tyler Matheson. Morgan is in for Kelly today. The minutes of the last Fed meeting are due out momentarily. What the Fed says matters to the market, maybe even more this time than usual as investors look for taper timing hints. And any comments on the clip?
That's right. Well, ransomware protection is
Well, everybody's
focus.
anticipating
Demand for cyber insurance is skyrocketing.
some volatility.
So are rates. It's creating opportunities and challenges for some of the country's biggest providers.
And we will talk to the man behind the Defense Department's decision to call off that controversial $10 billion Jedi cloud contract and why the fight's not over just yet. Power Lunch starts right now.
As we await the Fed minutes, here is how the markets are in wait-and-see mode. As you can see right there, it's basically a very narrow trading range right now. The S&P is up about 0.2%, 43.55 is your level there. The Dow is up just fractionally, or about 44 points, and the Nasdaq is
Oh, look at that, just
hovering around the
whippy,
flat line.
baby,
Nasdaq
whippy.
did hit a record high earlier today, though I will note the yield on the 10-year falling to its lowest level since February, as well as you see a dramatic move there. The yield on the 30-year is below 2% right now. That 10-year, 1.83%. Growth here, 140. That's
Wow. All right, we've got team coverage of the Fed minutes. Mike Santoli is at the New York Stock Exchange. Rick Santelli is at the CME. Elon Moy is standing by to bring us the updates on the minutes as she gets them. We begin, though, with Mike, who's tracking the action in some of the interest rate sensitive names. Santoli. Yes, Tyler, I mean, really, since the last Fed meeting, and especially the last couple of days, you've really seen them move toward those sectors of the stock market that benefit a lot more
See, this kind of action is why I stay out. I mean, you know, I don't need to trade this. I'll just trade an orderly market. Oh, really?
Some of the headlines coming out is regarding the taper. reaction, such as we have it at this point. Lindsay Piegza is chief economist at Stifel, and Jack Ablin is founding partner and CIO of Crescent Capital. Jan Moy reading through the Fed release and will raise her hand to bring us the important updates such as she knows them. Lindsay, let me begin with you. This is probably the last sort of formal communication I think we get from the Fed before the Jackson Hole meeting. How specific do you expect them to get today with respect to either timing or whether, as Rick pointed out, they're going to start by pulling back on their purchases of mortgages versus treasuries? What do you expect?
Well, that's exactly right. Investors were looking for more clarity on two big questions: when and how to initiate that taper. Now, as far as the timeline, we know in June, Chairman Powell said that we're rapidly approaching the timeline to discuss taper. We see in the minutes there was a lot of background chatter, a lot of ongoing conversation, with a number of participants pointing out that it may be now appropriate to begin that discussion, but it wasn't a widespread consensus. So we do feel that we're nearing that timeline. July may be too early, October, November too late. That puts us right in the August-September timeline, which, as you mentioned, lines up with that Jackson Hole symposium. In terms of the how, again, we've heard from a number of Fed officials really talking about targeting mortgage-backed securities as the primary target for lowering asset purchases, essentially implying a two-speed approach. Again, in the minutes, we see a lot of that discussion, but hardly a consensus view, suggesting that even after the discussion is announced, late summer, early spring, or excuse me, late summer, early fall, it's likely that that is continued to be debated going into the end of the year. So we've had a lot of specifics here.
Before I bring in Jack, let me turn to you, Jan Moy. You've been going over the data there, and we've been running a few little quick headlines about where the Fed sees the economy in terms of its recovery, inflation risk, and so forth. Sum it up for us.
Yeah, well, what we know is that the Fed did have a discussion about what that taper would look like when it occurs. The Fed minutes show that the participants did not believe that substantial further progress had yet been made. However, there was a discussion about how to taper and whether MBS, whether this mortgage-backed security, should be sold off first or perhaps more rapidly than treasuries, because, as the minutes say, there was concern about valuation pressures in housing markets. However, other participants said that they should be reduced. Treasury and MBS purchases should be tapered at the same time. That would be in line with previous Fed actions and with previous Fed communication. So there's already this discussion around sort of the process of tapering and what should go first, MBS or treasuries, or whether they should move together. In addition,
So I'm just taking in the news, just seeing what the Feds are saying, kind of staying out of this volatility.
Auto, semiconductors, etc., and that a few participants did say that economic conditions could be improved more quickly than expected back in the spring.
Seems like it's drying off at this point.
The expectations for Fed funds liftoff. We saw that in the dot plot projections, with 7 Fed officials now seeing the first liftoff happening in 2023 instead of in 2024, and that seems to be reiterated in the minutes around this idea that the economy is recovering more rapidly than expected. However, the officials did note that the reopening has been unprecedented and uneven. Guys.
All right, let's bring Rick Santelli back into this. I mean, Rick, you just mentioned the MBS piece of this taper debate to start off the hour here, and certainly we do seem to be getting, or maybe we're not getting, substantial progress on substantial progress. What are you seeing as you comb through this report right now?
It certainly seems though the Fed's trying to buy some time with regard to the taper because all the buzzwords are here. There's a bit of disagreement as to whether it should be focused, the taper, on mortgage-backed securities. Several members seem to be going in that direction. So I guess the big headline here is it's all about the taper, but really we don't have any new information, although there is discussion, like on the street, that the focus should be in mortgage-backed securities, but there's disagreement whether that's correct or not. All right, let me bring in Jack Ablin, Rick, if you don't mind. You say in my notes, you say that the Federal Reserve and market participants are underestimating inflation risk. It seems like in these headlines that they are acknowledging that they underestimated the inflation risk. And by the way, just as a personal aside, I'm always sort of tickled/troubled I can't imagine what's more core to the American experience than eating and driving.
Yeah, that's it, Tyler. I think, Rick said it. The Fed wants to buy time. They don't want to act. They certainly don't want to act too soon. They recognize that, look, the last 10 years, they've been trying to gin up inflation with very little luck. Prior to that, they've had a previous 40-year history of keeping a lid on inflation. So clearly, they want to err on the side of too much stimulus, too much inflation, knowing that they can circle back and tamp it down later. That said, I think there are two pieces that we need to focus on that really are sticky. Not just the food and energy side that you can talk about, but also labor costs, which really are starting to tick up now, and housing prices. The fact is that owner's equivalent rent accounts for a third.
Well, I guess
of
now people are
our,
just analyzing the news and giving their opinion.
population, and that's starting to filter through. Rents typically don't go down.
Yeah, I mean, such a key point, Lindsay, and it goes back to what we're talking about here around the talk of taper and specifically what that could look like and the mortgage-backed security piece of this, given the fact that housing has been so robust, I don't think is even the right word. It's been on fire, and we've seen that not only in terms of home prices, but now we're seeing it in rents as well. So, are we getting, or did you expect to get a little more meat on the bone around how the Fed is thinking about substantial progress? How does this set us up as we go into the July meeting and then the August meeting out at Jackson Hole?
Well, it's interesting because the Fed was pretty clear that the economy at this point, broadly speaking, still needs support. So there was no rush as we're reading through this commentary to immediately roll back some of these emergency measures. Now, they are beginning that conversation, but again, no sense of immediacy here. They do want to be very patient, very cautious. At the same time, they are recognizing
Immediacy.
pockets of strength, particularly the housing
Is that
market.
actually a word?
And so that's
Isn't
where
that
we're seeing
urgency?
this momentum for the discussion to target MBS purchases. So they're really walking this fine line. Again, acknowledging some of the vast improvement, but saying, wait a minute, this isn't necessarily broad-based, and we do need to keep our eye on the ball, still keep our foot on the gas, and maintain this very accommodative policy position, at least for now. So they're buying themselves time, I think, over the next couple of months until we get to Jackson Hole or beyond, when it's
Jackson
likely that
Hole.
we hear the language of tapering to come in the coming months.
Jack, final question, if I might. You favor large cap value over small cap growth in the U.S. emerging markets over U.S. But the interesting point here that you make, total return is made up of three things in equities. It's the earnings growth of the company, it's the dividend the company pays, and it's the speculative premium that investors are likely to pay for the stock. You say that speculative premium is going to compress and that you need to look at organic growth, that is earnings growth and dividend yield and growth in choosing stocks, and you say that it's healthcare, financials, and I forget what the other one was, that have done the best on that over the past decade. Do you expect that to continue as we move forward?
Yeah, I'm not sure I would characterize that last component as speculative. I think it's valuation, expansion, or contraction that really is directly related to interest rates. The fact is that earnings yield, which is a function of the treasury rate, is just the reciprocal of the PE ratio. And as earnings yields decline, PE ratios can expand. If we don't expect interest rates to continue to decline, then we can't expect PEs to expand. And gets back to my original argument. So it looks at, we'll look at basic materials, industrials, healthcare, financials. Those are the areas that I would like to see in portfolios as we look for more organic growth.
Thank you very much, folks. Lindsay Higgs, Jack Apple, Elon Moy, Rick Santelli, Mike Santoli, everybody we thank.
An all-star kickoff to this 2 p.m. Eastern hour. Well, coming up, demand for cyber insurance is soaring. A cyber insurance CEO will tell us which sectors are...
Cyber insurance. Oh, man. Whole new sector. So no new news. No new news on interest rates. Just gave the talking heads something to talk about, something to debate. But same old, same old. Somebody brought up an interesting question, though. You know, because they don't consider gas and food in inflation, which are our two primary expenditures. Russell's doing a retrace. Still like today's daily bar. I'm just hanging out, watching the markets, jockey around. Yeah, that made sense. There's got to be something missing in there. Yeah, it does. Guantanamera. Looks like the market went back to sleep. Mr. Williams. Yeah, well, you're not trading right now, right? But the setups would be the same. You just use a longer time frame chart. You could really just use stops like if I wanted to do something like that, I would put a stop at a buy stop at like 56.69. Well, actually, that's hard with options. You could do a conditional. One of the platforms I trade on has a conditional, and it'll execute a trade based on another market moving. So I could have said if the S&P broke 56.64, then buy the appropriate amount of contracts calls, and then I would be in this trade on the daily. So I can set a conditional if the market breaks this to go long calls, and it would execute right there, and I would be in that run up. Or you could do it on the 60s, 60-minute charts. But you still have to be monitoring the market. Just a good day today, man. Good, strong runs. Things paid off quick. I think we were paid within the first 20 minutes, right, of the day today? Or was that yesterday? Because I know yesterday we did well also. I won't look until the end of the week. Messes with my head. Yeah, that's cool. So if you can get good with conditionals, you could just use stop orders to enter. And then you could trade breakouts and hammers and stuff like that. Or if if you trade an ETF, you can go right at it. But I guess it comes down to what's appropriate for everybody. I just you can't make as much on the ETF as you can on the index option. I would look at the money, and the reason I prefer that is that you capture more of the move, dollar for dollar. So, and at the money is going to be about a 50 delta, so you should get, about half a buck for every buck it moves. And out of the money, it's really got to start to accelerate before you capture that move, that much money, And then if it's a slow mover, you might just eat up your time. I mean, you can go out of the money if you want to keep your risks low. But you could also manage your risk with a conditional stop loss. I really don't use out of the money calls. I know a lot of guys do that on long-term bets, but that's a different game. I mean, that's on fundamentals. You could figure out really, what's overvalued, what's undervalued, and targets like that. Yeah, Yeah, that's what I'm thinking. Theta will eat it up. So so I'd prefer to be at the money and get the move. I mean, yeah, you know, you could be moving in the right direction just ever so slowly and just, you know, losing value on your time. You know, the move could be slow, but you may see enough to just take that profit and be happy with it if you're at the money, or take a piece off and leave some. If I mean, if I was trading off of a daily, I would just go with weeklies. If I was trading, because a swing trade, I mean, you're talking about a couple of days, you know. So I would just make sure I have a few days in there, maybe 2 days cushion. I mean, I would go as close as I'm comfortable so that I get a better return. Yeah, you know, I can put up less money and get a better return. But yeah, you know, I would want enough time for the idea to work out. But for me, a swing trade, I'm trading either off the 60-minute or the dailies. You know, I'm not going any further than that. And a daily move is usually, you know, a pretty quick move the next day or what have you. I mean, it could turn into a trend, but I probably have a pretty close target for a piece, and then see if I could get caught up in a trend with another piece with the, you know, like a half or 2/3 of the trade. Because one thing I like to do is bank money. But yeah, I mean, yeah, you know, I'm hanging out and I'm trading, but I like the intermediate term trades, like the spread trades and things like that, because I could go hang out, I could go sail. I don't have to sit here and you know, stare at the screen all the time. You know. And I mean, I make plenty of money doing that. And then, but if I do see a great trade, I don't mind doing it. Yeah, you know, there were some good trades today, and I had really heavy positions, and you know, I had some home runs. I don't really like to talk about the dollar size or the contract size, but I'm sure most people would be overjoyed. Just not seeing anything I want to get into for the afternoon. I mean, you know me, once I make money, I kind of just lay back anyway. we have been together long enough for you to know. This is kind of interesting. You got that topping tail, and this bar is making its way to the low here. I mean, there's a lot of congestion in this. It's only 4 points off of breaking that pivot low, and then I think if it breaks this if it breaks 51.17, I think we're looking at like 42. Just a lot of congestion in these inside moves. I don't like to work hard for my money. Should I close Apple? The guy's saying. Oh, next stop, 52.18. After that, you got 49.40. Man, oh man, oh man, that thing just looks strong, strong, strong. This poor guy. Mm-mm-mm. Yeah, that's some flat momentum right there. Starting to get a wee bit rocky in here. I do believe we're beginning to get the effects of Elsa, the new lady in my life. So everybody saw Matthew McConaughey is running for office?
I can just beat this down $2 or so a day.
Just viewing that dude Matt's page. I'm watching all the excuses come by. SEC, do your job. Total corruption. Yeah, there's people like dropping chats. Bought 13,000 more on the dip. We'll buy more every week. I'll hold forever. Yeah, I think you will, man. I think they got a 401k or a retirement account now. Oh, some people are like, we are getting crushed. Is this over? I'm confused. Too funny, man. I don't know. Should I laugh? I guess that's not professional, right? When you sit there and watch all these novice. I mean, it's like just textbook. Yeah, man. I mean, definitely not. Yeah, talk is cheap. Um, you hear it all the time, and then and I mean, it's the nature of the business. I mean, you only hear about the winners, you never hear about the losers, and everybody just talks. So, yeah, people are just sweating it. I mean, there's no buying going into it. I mean, it's obvious. You could even see the volume just dwindling away. And it's just floating down, on its own weight. And I don't know what, some people like it'll happen eventually. I don't know what they think is going to happen. I mean, do they think the company's going to become profitable and, be a darling of Wall Street? Because that'll force the shorts out. But, I don't see that, happening. Just based on that CEO's interviews, I'm really not impressed with the guy. And I got a theory that the fish stinks from the head down. So if I'm not impressed with the CEO, I'm not going to be impressed with the rest of the team. So I don't really see a turnaround, And the fact that he just jumped on the appreciation and did those secondaries, it seemed desperate to me. So it makes me wonder, you know, is it desperate, or was he being an opportunist? I mean, it just makes me wonder. Yeah, I understand they believe the short squeeze will kick off, but what's the catalyst for it? I mean, you know, there's no catalyst. These guys are in the squeeze. They're not looking at time. I mean, this stock went from $10 to $70. That's not why they shorted it, you know, and they probably faded that run up. So their cost is probably a lot higher than $10. Yeah, but what's going to force them to do that? You know, they don't need the money. You know, they're not like, you know, they got to make $500 a day to survive. I mean, that's not what they're in the industry for. They came into the short, and they didn't put a clock on it. They're looking at the fundamentals of the company, and they're saying, okay, can this company severe? You know, so nothing's changed. You know, I mean, the biggest risk to the short is that retailers organize buying and force it up beyond their pain threshold, which, when that worked in GameStop, there's no doubt about it. It worked in GameStop, and it was a new phenomenon. And I promise you that they reevaluated their short positions. And if they were short, they said, okay, you know, there's this new risk exposure we need to introduce here. How do we handle this? And they came up with a game plan. You know, how do we ride that out? They have a game plan, whether it's the convertible debt, or they reduce their size, waiting for a pop-up, you know, knowing that when it pops up, they could fade into it if they get targeted. I mean, who knows? That move up could be them closing a portion of their position because they see this thing all over Reddit. You know, I mean, they didn't close their eyes to what happened. They looked at it and figured it into the game. So what's the catalyst? The only catalyst really will be if the fundamentals change on the company, you know, or if they can organize buying power to get it up to where these guys are hurting, where, you know, the risk doesn't make sense, and they'll close it and then short it once the buying stops. But I think that's what they're doing now. I mean, that's what this consolidation looks like to me. It looks like the shorts are slowly rolling in, shorting more. And it appears so because part of the pitch of these goofy guys is that shorts are up, shorts are up, shorts are up. But yet, you know, they're saying, okay, that's more buying power when we squeeze them out. But what that's telling me is that intelligent people are seeing that this thing's becoming more and more vulnerable, and they're just raising their costs. You know, they faded into this, and through this consolidation, you know, they're selling to all these bozos who are yelling, buy, 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 buy. And, the hedge funds are screaming it too. Buy, baby, buy it from me, you know. I mean, this is what I feel. I guess I could be totally wrong. I'm certainly not willing to lay money on the idea that I'm wrong. I would rather lay money that I'm right. I just put yourself in the hedge fund's position. You know, you have a bunch of neophytes going after the market in an unorganized fashion. I mean, basically, the only way they organize their money is through social media. And you have a company that can't get out of its own way. You know, I mean, all you have to do is stay solvent. And I'm sure this isn't the only position they have in their hedge fund. But I'm certain that for the most part, it's the only position that a lot of the apes have. You know, so it's a do or die for them. So it's a lot more probable that they get hurt. I mean, people will just wisen up and say, okay, yeah, you know, like I read one guy. Well, if they're buying as the price tumbles, it helps the shorts if the shorts are trying to raise their price, raise their short price. So if the shorts came in and started shorting into it right away, they're going to push it down just on their own shorts. You know, they're not going to be able to get filled, right? So they need volume to get their orders filled. You know, it's not like, they're knocking off 100 shares, 1,000 shares. You're talking about big positions. And they can't hit it all at once because then they show their hand. So they trickle it out. So the more these guys hang out here in this consolidation, the easier it is, or the bigger the short position's going to be, because the shorts could just donating money to adopt dates. So the shorts could just trickle out, their short position, and they could get filled, because that's a problem. I mean, when you're trading big, I mean, that's a problem I have with options. I have to look for where the volume of the options are so that I can get my orders off. I mean, if I'm trading 1, 2, 3 options, it doesn't make a difference. But when you're trading size, I mean, you got to try to get these orders off, and you don't want to be the guy pushing the stock up. Or in the short situation, be the guy pushing the stock down, because when you stop your shorting, then the stock's going to float back up. So you need to trickle out, trickle out, trickle out, trickle out, trickle out. I mean, that's what a trader does. And that's why guys get on the phone. You're calling around, you're looking for stock, you're trying not to affect the market too much, so that you can get your position filled. And I believe that that's what's happening. I mean, that's usually what's happening when you're in a consolidation. When you see the markets consolidating and rolling over, that's just big institutions unloading the positions on the retail brokers. And then when they're done, the market rolls over. So that's what I suspect is going on here. I don't know if it's going to make a favorable end of the day wrap up, but this is what I suspect. And just this pattern looks very familiar. Although I would like to see, I would be more convinced if I saw one larger topping tail. If you could watch my cursor right in this region. If there was another topping tail right in this region, I'd be dead convinced. But it could be subtle. I mean, there are a couple of topping tails in there. I mean, if they can't push it up now, I don't know what they're waiting for, I mean, they're going to sit around and wait for the shorts to close. There's no time frame on this thing. There's no reason for them to close. And if they did actually buy convertible debt, forget about it. They're making money just sitting on this thing. And if they bought the debt below parity because the company sucks, then at the mature date, they're going to get parity. So they're going to collect, even if this shorts, and the short works out and it goes down, as long as the company doesn't go out of business, they're going to get parity on those bonds. If they bought the bonds for $87, they're going to get $100 for the bonds, plus the interest while holding it. So, once they close their short position, there's really no need to close their bond position if they took the convertible debt. They won't convert it because, it might be below the strike price of the security. But, just hold that bond to parity. And that's what one hedge fund did. They converted their bonds and took the profit. And instead of allowing that buying to go into the market, the CEO issued new shares to satisfy it, from what I read. You donated $60. How did you donate $60? What is there really like an adopt gorilla fund, or are you like, is that like a euphemism for buying or losing money in the security? I mean, if you're super chatting on Matt's page, mention my name, man. Be like, yo, go to off-grid trading. Help me get those subs up. So anyway, I don't know what they're waiting for, you know. I mean, if AMC turns around, starts becoming profitable, then, they got a winning trade. I think the first step would be get the gum off the seats. Apple, 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 apple. It's not trading. It's not investing. It's crap shooting. You know. When it first started and there was momentum, looking for the momentum, right around May, you could see the Mac Daddy make the trend reversal move. You have that consolidation and the breakout, and that's the trade. That's where you're trading. It has momentum. This bull flag would have been nice to take, but it gapped up the next day. Because there's momentum, you could have taken that gap and ride that up. But I don't see it anymore. There's no setup. There's just no entry setup. And being that there's no setup, that means that there's nothing moving it. There's no momentum, there's no buying, there's nothing moving it. It's not turning bullish. And the 60-minute was flat for a long time, and now the 60-minute is turning bullish. I used to turn, and at my end of the days, I'd say, okay, the 60-minute is turning bearish. I'd say, okay, the 60-minute's neutral, or look bullish, but now even the 60-minute's turning bearish. Just there's a lot of congestion, so it's just taking its time going down. But each support is another pain level for an ape. And it's just every time it hits a support, another group of apes get cross-eyed and close their position. And if these guys are still buying, how many of them can handle that gap close of $32? That makes this thing very vulnerable. You're not talking about professional traders, so these guys are going to start getting emotional, not that they're not already, and they're going to start getting squeezed out or shaken out. This is just me speculating. Could be egg on my face, but that's how I would manage my money. I do like charity. Donated. Diane Fossey does gorilla preservation in Africa. Oh, all right, cool. Yeah, I like her. Is our funds is something going to Diane Fossey? Is that how they got the ape name? Are they making donations? I used to like to do that in my firm. Like every ticket, $1 went to different charities off of every ticket. A ticket is an order. Back in the day we used to write tickets. So every trade, $1 would go to a charity. And on the in and on the out, so every direction. So each trade, $2 would end up at a charity. So is that what they're doing? So we're just watching the market churn around. Actually, there was a nice little up move right there. That was like 10 points, but that was from 242. Yeah, that would just happen while we were gabbing about AMC. It's a single bottom, and we're trading inside a range. Not really the trade I'm looking for. Yeah, I'm familiar with Fossey, but is that what Matt is doing? Like, are they making a donation to her preservation efforts? Mm-hmm. It's got a lot less people streaming them these days than they used to. I wonder if we could use that as a leading indicator. Well, we're testing the highs of the day. Oh, that's cool. Yeah, Wall Street bets. I saw one chat. I can't wait for this naked shorters to get crushed. I don't think they understand. Well, I don't think. I mean, I know they don't understand the industry. All right, I can't watch that. It's frustrating. Bink. That's closed. Mm-hmm. I mean, it's hanging pretty tough today. It's only down $5. Guess that's over 10%. But I gotta say, man, if you're feeling this much stress over a trade, you're not trading right. We are in the witching hour. Not a lot of volatility either. I think this is just going to close quietly today. Hmm. I don't know. How's everybody feel about the market, man? Is it running too much? Are we getting vulnerable? Wow. Seems like everybody just likes hanging out and being quiet. I love how the Fibonacci's work, man. Yep, just watching charts. You know, if you go into a beehive and you divide the amount of females by the amount of males, you get like 1.618, but you get a Fibonacci sequence number. And then I think it's in sunflower seed fields, you'll get the same thing. It's the golden ratio, baby. think physicists need to look into that more. July 7th. So basically, we're just in, we're just above the opening range. Probably end up closing right in it. Tomorrow's going to be an interesting day, ladies and gentlemen. I mean, there's talking about it just being a depression when it gets off of Florida. I'm talking about Elsa. So, I don't know what my circumstance will be. I mean, it may be too bouncy for me to even set up my screens. We shall see, we shall see, we shall see. Hope I could hit the gym tomorrow. Do I want to build a hurricane? I don't understand the question. I think she's a storm right now, and by the time she rips through through Florida, it's going to be a depression, which is cool, because I mean, that's like less than 40 miles an hour wind. I mean, you could sail in 40 miles an hour worth of wind. Looks like it turns into a storm again once it hits Jersey. I guess I'm not up on my Disney, huh? You know what's interesting? Looking at the volume, it seems like the volume is starting to pick up on down days. On AMC. Yeah, I think we're just going to have a quiet close. Coming into the last half hour. So what do we got tomorrow? We got jobless claims. That's it. Really no other catalyst to move the markets. Next week we got earnings kicking off. More cushion, more cushion. So if anybody's new out there, hit the subscribe and hit the bell, because this is off-grid trading, and we have third world internet service, although we do stream from the first world. So if you hit the bell, you'll know when I'm back up, and if you hit the like, I'll keep coming back up. We're just watching the markets peter out towards the end of the day. It was a good day, though. I think everybody involved got made a little money. Even the late risers. Actually, a great morning. Got 3 trades off. One was nickel and dime. The other 2 were pretty substantial. Oh yeah, is there an FOMC at the end of this month? Is that at that camp or something like that? Yeah, I'd say that's done. Good job, man. 27th to 28th. Looks like we're testing that high again. Oh, we're starting to rock around now. Rock around. It's pretty early in that 30-minute bar. Yeah, I didn't like that break early in that bar. Yeah, I don't see that 27th, 28th date in any of the economic calendars. I mean, I'll go with the Fed website over the calendars. They probably have to catch up. I found it. Interest rate decision on the 28th. You are right, loop and loop. Mm-mm-mm. Twenty minutes to the close. 10 minutes to the cleanup. Just got back. What'd you miss? You missed a lot of silence, man. You know, market's just going into compression. We're waiting for it to close. Once the market closes, I got to put everything on lockdown in case the storm rolls in overnight. Got my same loyal free folk with me, closing out the market. I think we got knocked off twice today. It's pretty good odds. Got to get my rope set up. Have some emergency rope. Some backup in case my ropes fray or chafe. Oh, did I do a rap freestyle? Or are we referring back to Frozen again? Got my chafe guards on my lines. Actually, I had to seal up a hatch too. I had a hatch that some bolts were leaking. It was dripping down into my boat, into my baby, making her wet. Woo. And it's hotter than a June bride on a cooking stove. There it is, 10 minutes to go. Now the market gets whippy. Cleaning up the books. I guess Wyatt likes to trade this also. Nope, we're breaking the high. Looks like everybody's gone for the day. All right, well, the market's coming to a close. We got about 5 minutes left. If you're new to the channel, just hit the subscribe and hit the like. I'll do an end of the day wrap up video, and you'll get notification when that comes up.